What's up, everybody? Good afternoon. Welcome to the Chaos. My name is Brad. The stock market is crazy and chaotic, and I made it my mission to help you guys own it. It has been an interesting day in the stock market. We have some really weird things going on. I'm going to explain to you why I think that might be happening. But guys, before we get started, let me shout out my starting five. Tracy H. Showing up early and often. What's up, my man? Froggy, Kevin Hawthorne, Snookeroo, Stabby Money Show. You guys are my starting five. If you didn't make the starting five, it could be because you didn't hit that notification bell. So make sure you're doing so. Hit that notification bell, subscribe to the channel, show up early, and just might get shouted out here on the channel. So, guys, looking at the markets right now, it is ugly. S&P 500 is down nearly 2%. 39.15 is what it's sitting at right now. It's down 76 points. The Dow is down 552 points, or 1.69%, and the NASDAQ is down 2% at 235 points. And the WTI crude sitting at $75.55 per barrel, and let's not even get started on Bitcoin. It's sitting at 20,641 points. That's down 6.23%. Why is everything selling off? And I hope that the poll at least gave you some sort of clue. And it has everything to do with the jobs report. Today's move has exactly nothing to do with anything other than people just being fearful. People worried about the jobs report tomorrow. Is it for good reason? We will see. Tomorrow, the jobs report is expected to, February is expected to have brought in 200,000 jobs. And this always perplexes me. By the way, we are reacting to earnings today. We have Ulta on deck. We also have Oracle and Docusign. We also have Bionano Genomics. I knew it was Genomics. BNGO, Kathy Wood favorite. And the Gap, as well as some other smaller ones. We can certainly bring them up if anybody is curious about any other earnings that I don't speak about. But those are your headliners for today. And so getting into the overall market, I mean, obviously it's not been pretty, but, you know, we saw 500,000 jobs added in January. But we saw a lot of layoffs between January and February. And I think that the expectation of 200,000 jobs added in February is actually ambitious from as far as the economists are concerned. You guys know how I feel about economists. We'll continue to watch this. Here's the thing. It's Thursday. And if you guys recall, I've been watching the weekly chart very closely. And I made mention that I think that there's a chance that I could change my tune if, by chance, the weekly falls below this trend line and falls below the 50-week moving average. Let me remove this trend line here because that's not really relevant right now. This one is the one that I'm keeping track of. 50-week moving average. There is a chance that the S&P or the SPY closes below that this week and then closes and we start to see a lower low on the weekly chart. And I told you guys that would make me nervous. For somebody who is bullish on the market this year, that would make me nervous. However, one key piece of information tomorrow could change all of that. If jobs come in lighter than expected, the market will go off tomorrow. It will go off. All the downward movement today will be nullified. It won't matter. I'm not guaranteeing that will happen. I'm just saying there's a strong possibility that it could. And I would love to get your guys' thoughts on this. And that's why I put the poll in today's stream. So 47% of you guys are feeling pretty confident that could still happen. 35% of you, though, say that you're still feeling bearish. 15% so far say that it's not going to matter. And about 3% of you, or one of you, looks like, is at least waiting to see what the data comes out next week. And we've heard from Jerome Powell over the last couple of days talking about how the Fed still remains data dependent. Now, I would make the argument that the data that the Fed's pulling from is old data, is lagging data, doesn't paint the full picture, and that could of course, create problems. But if that actually is the case, if the Fed's going to continue to just beat the drum on jobs and CPI, PPI, and PCE, and all the other shit, then stands reason to believe that investors are going to say, hey, wait a minute, if jobs are coming in lighter tomorrow, the stock market should go up. Let's just buy it all. So I think that that's certainly what could happen. I think Snookeroo says I was a bull until Tuesday. I think we're headed for 3,800 sooner rather than later. I don't know, man. I don't know. I think it's going to depend on the data that comes out. Consensus, I'm sure, probably is from analysts and economists alike. Probably the expectation is that we see a 50-point rate hike for the month of March. But the Fed decision doesn't come out until after we hear from the jobs report tomorrow, the CPI and PPI. It'll come out next week. And that's going to be important. That's going to be very important. So I am in the camp of I'm still going to remain bullish for now until we see the data come out tomorrow for jobs reports, from the jobs report for the month of February, and what we see from CPI and PPI. I've had this theory since January that I feel as if February is going to be much lighter, much softer than January was. January was hot as shit, right? I mean, CPI came in hotter than expected. PPI was hotter than expected. Jobs were 500,000 jobs were added to the workforce in January. I think it's going to be a much different picture painted in February, and it all starts tomorrow. So it'll be very interesting to see. I'm still holding my bullish stance for now, but that might change tomorrow depending on how things look. And then, of course, what CPI and PPI look like. But the trend is still very much your friend, my ladies and gents. And again, that 50-week moving average is going to be very important to watch. We see a close below that 50-week moving average, and the week's not over yet. This candle that you're seeing that is currently sitting below the 50-week moving average is going to be very important to see where that closes at tomorrow. So if jobs come in lighter than expected, don't be surprised if we see it close back up above that 50-week moving average. So it's going to be very important. It's going to be a very important day tomorrow. Very important day tomorrow, and very important week next week from a monetary policy standpoint. Snooker, let's see here. Is it me or is your audio echoey? Like the input is on condenser mic or something? Let me double check. No, I think we're good. It doesn't echo in my ear. Is it distracting, Stephen Hoyer? Because if not, then I'm just going to continue. But if it's distracting, then maybe I'll do some troubleshooting here. But it sounded okay when I started today. But thanks for the feedback. If it's not distracting, I'll just continue. And then I'll address it after today's stream and see if I can improve it. But yeah, I'm actually in Maryland this week, so traveling. Okay, cool. Yeah. So understood what you said, Stephen Hoyer. I'll see if I can mess with it. But I traveled, so I brought all my equipment with me. I'm here to visit Fat Man Zoom this weekend, so I brought all my stuff, and so yeah. Okay, cool. Yeah, as long as it's not terrible, I'm just gonna continue then. But I appreciate the feedback. I'll see if I can address it before tomorrow morning. Which, by the way, I will be live tomorrow morning at 9 a.m. Eastern Time with Don from the Don Fran Show. He's going to come in as he always does on Fridays. We're going to talk about the markets and what he's got going on, trades he made this week. Matt Masson said, mistake number 1 says you're fighting the Fed. I'm not fighting the Fed. I'm not fighting the Fed at all. But the Fed's not saying that Jerome Powell didn't say he wants the stock market to crash. JMO says, record low unemployment last reading. It can for sure be lower, but I'm pretty sure it's heading up as a result of a lot of the layoffs taking effect, planning for a dead cat bounce. The interesting part is um, it's missing base. That's interesting. Yeah, I'll have to mess with it. I'm not quite sure what the deal is with that. Let me just check out one thing. Maybe that. Oh, I think that helped. I think that helped. I think that was a quick fix. Let me know what you guys think about that. That might be a quick fix. That sounds better to me. But let me know. So, anyways, I think so. JMO says record low unemployment last reading. It can for sure be lower, but I'm pretty sure it's headed up as a result of a lot of the layoffs taking effect, planning for a dead cat bounce. It's an interesting point that we talk about when it comes to unemployment. You know what I mean? Like Jeremy Siegel is probably one of my favorite. I don't know if you want to call it analysts, but like students of history. If you guys aren't familiar with Jeremy Siegel, he's on CNBC a lot. He's a professor over at University of Pennsylvania and been in the markets for decades, right? Old as shit. And so, but he's very knowledgeable about these things. He's lived through a lot. And so one of the things that he brings up is that it makes no sense for the Fed to almost kind of like wish that unemployment goes up, right? That the Fed's looking at all of the wrong things, and a lot of things that the Fed's looking at are lagging indicators, such as CPI, and that like the things that they're taking out of CPI are used car sales and real estate or real estate, and they're deciding to just look at those two things and weigh it so heavily that they're not paying attention to everything else. Not only that, but that wages have yet to really caught up with inflation, and so that's also a problem. It's not that jobs or lack thereof is a problem. It's that wages have yet to have caught up with inflation, and so he brings up some really good points. It's so funny to me that it seems as if the narrative that Jerome Powell is painting is that he almost wishes that more people would just lose their jobs, which is crazy to me. It's just it is nuts to feel that way. Like, I don't know. If you pay close attention, is this iBobPep says if you pay close attention, you will know that all the earnings are bad, but the stocks keep going up. That's not true at all. The earnings actually have been quite good for the most part. 6% beats across the board on average. The only reason these earnings are because of staff cutting, that is absolutely not true. 100% not true. I don't know where you get your information from, but give me supporting evidence of that, because that's 100% bullshit. We're just pulling shit out of the air at this point. But no, and you're talking to the guy who covers earnings every day. So you're going to come in here and tell me that earnings are BS. That you're barking up the wrong tree, my friend. Go to another YouTube channel and spew that, because that is not true. Absolutely not true. Not trying to call you out. I'm just saying, like, we're not going to spread that BS around, because earnings have actually been quite good. And the only thing that's actually really confused me a lot has been retail. The consumer has actually got me perplexed. I'm trying to figure out if it is the consumer that is the issue here, or it's that these companies haven't quite figured out what the consumer wants, right? I mean, we've seen a lot of interesting earnings from retail that either have done really well or they're just piss poor. And you look at Nordstrom versus TJX, right? So like TJX crushed it while Nordstrom's still struggling. Like, is it that people are looking for cheaper options? And that was my next question. But then I look at things like the Dollar Tree or Dollar General that aren't doing all that well, or Walmart's not even doing all that well, because they're mismanaging inventory, right? And so there's just a lot of nuances that kind of really have confused me when it comes to consumer. But one constant is that People are still paying to go travel. People are still going on vacations. We've heard from Hilton that had amazing earnings, and Airbnb that absolutely crushed it. The airlines are feeling it. Even the cruise lines are pretty optimistic about demand right now. And so it is interesting. Like, the consumer's still strong. It's just finding out where the consumer is. You know what I mean? Like, it is very, very interesting to see how people are spending their money right now. And the biggest like question mark I've had throughout this entire earnings season has been retail. The consumer stocks have really kind of just had me scratching my head. Amazon did not have great earnings. Etsy did. They're in the same space as far as e-commerce is concerned, right? Mercado Libre crushed it. But you know, it's just. But Shopify shit the bed, right? Like, what is it? Is it a case by case thing, or is it a macro problem? And I think that it's more or less case by case from what we've seen through a lot of these earnings through this earnings season. So it is very interesting for sure. Nima Dog says those earnings calls are to make you a fool. I don't know about that. But anyways, let's go ahead and take a look at some of those earnings. Anyways, the market's officially closed. Ulta, let's go to the 5-minute chart to give us some real-time action here. Ulta is a flat here so far on the day, or after hours. Oracle, we're going to pull that one up, and then we'll have Docusign as well. And we'll pull up BNGO. And Gap is, that ticker symbol for Gap is GPS. In case you guys don't know, it is not Gap. That stock is now down 5.25%. I didn't get a chance because I wanted to kind of address the market because I just thought it was that important given how much the overall market moved down today. So I didn't get a chance to address the expectations here, but we're already starting to see some movements. So let's just jump right into it. Gap right now is down 5.25%. The expectations here were a loss of 46 cents, $4.37 billion in revenue, 3 upward revisions to 3 down. So the market, or the Wall Street was split on this. Let's take a look at those earnings and see if we can find the actual numbers here. I'm pulling them up, see what we got. Gap came in. Let me see. I don't have anything on Gap yet. Those numbers have to be out for this to be down 5% right out the gate. I got nothing so far on Gap. But there is some movement elsewhere. Let's see if we can take a look. I thought I saw Docusign moving a little bit. Maybe not enough for those earnings to be out just yet. We'll keep an eye on that. Oracle just barely flat. Ulta ended up moving a little red. But that's not enough here yet either. Let's see here. Ulta, I'm super pumped on. Ulta has been an absolute juggernaut. Over the last 52 weeks, the stock's up 45%. Year to date, it's up 10%. Just steady as she goes, continues to crush it. Ulta is expected to come in at $5.60 per share, $2.99 billion in revenue, 8 upward revisions to 1 downward. There is no reason for me to believe that Ulta can't just keep going as it's been going. I'm super pumped for this stock, for anybody who's holding this one. The only thing that scares me is the valuation. It is at 23 times next year's earnings, and it's at $26.67 billion in market cap. So it is expensive, but you can't argue a lot of things, pretty much everything else. Profitability is amazing. It's at 43% gross profit margin. Growth here is also amazing at 20% year over year. So I'm okay with, 20 times next year's earnings or 23 times next year's earnings, given all the other good things that they have going on. So obviously, we'll see what happens, but Ulta, I think, is going to be just fine. And as the stock starts to move back up a little bit, we'll continue to watch that one. It's one of my favorite stocks in the market, period. It just always delivers, man. Just always delivers. Those earnings look to be out. Let's go ahead and take a look and see what we got for Ulta. Net sales came in at $3.2 billion compared to the $2.7 billion a year ago. The expectation from the street here, what did I say it was? sorry, 2.99 billion, and they came in at 3.2 billion. So they absolutely smashed revenue expectations. Comp sales increased 15.6%. Net income of 340.8 million, or $6.68 per diluted share, and that also smashes earnings expectations. That was $5.06. My goodness, Ulta just crushed it. Don't know why this is only up 0.5%. That's a bit perplexing. Let's see what their guidance was here, though. That always plays a factor, as we all well know. Fiscal 2023 outlook, the whole year. Net sales are expected to be at 10.95 to 11.05 billion. I believe that comes in line with what expectations were. I have to double check that. Comp sales 4 to 5%. That's also conservative, I think. Operating margin around 14.7 to 15%. Diluted earnings per share 24.70 to 25.40. I believe that's above expectations on earnings per share. Share repurchases approximately 900 million. It's almost $1 billion. So guidance there looks pretty solid. Stock is pretty much unchanged here, but they smashed earnings. Now moving down 1% here after hours. All right, so we got a bunch of other movement here. Oracle is now down 4%. We'll come back to Ulta. Oracle's down 4.25%. I don't know if Don from the Don Fron show is tuned in, but nope, I don't see him in here. But I feel like Don was saying that he was bullish on Oracle yesterday. I'm not quite sure if he actually ended up going long on that or not. But maybe I'll ask him tomorrow. But Oracle, ORCL is the ticker there. Came in adjusted earnings per share of $1.22. The expectation was $1.20, so they beat there. Adjusted revenue came in at 12.4 billion versus the 12.41. Slight miss on revenue there. Adjusted operating income 5.19 versus the 5.1. Beat there. So it's kind of a mixed earnings from Oracle. That the stock's down considerably here. I imagine that it has everything to do with those guidance numbers. According to, so mixed earnings here, according to Seeking Alpha. Q3 cloud revenue, 4.1 billion. That's up 45% and 48% in constant currency. Q3 cloud infrastructure, IaaS is what that's short for. Revenue of 1.2 billion. That's up 55%. Year over year. Q3 cloud application or SaaS, software as a service, revenue 2.9 billion, up 42%. Those are all pretty solid growth numbers, but it looks like some of that's falling short of expectations from the street. Board of directors declared a quarterly cash dividend of 40 cents per share. That's up 25%. And they're quoted as saying, our strong quarterly earnings growth was driven by 48% constant currency growth for the total revenue of our two cloud businesses, infrastructure and applications. Oracle's cloud businesses now exceed 16 billion in annualized revenue. We remain the overwhelming market leader in cloud ERP with approximately 10,000 Fusion ERP customers and over 34,000 NetSuite ERP customers. I didn't realize that they were in NetSuite. I don't follow Oracle close enough to, I guess, maybe have realized that, but NetSuite's solid software. Our technically advanced and highly differentiated Gen 2 infrastructure business continues to be a hyper-growth phase, up 65% in Q3 in constant currency, and that's from the CEO, Safra Katz. Yet the stock's down 5.85%. I think that a lot of that is just because of the mixed earnings there, but I don't really hate any of those numbers at all. Checking in with you guys on any comments here. Ulta is continuing to move down on an earnings beat and a strong earnings beat there, might I add. Let me see if I can find anything else as to why this might be down. Was it guidance, perhaps? I mean, the guidance didn't seem terrible. Let me double check here. But Ulta, those were some incredible numbers on the report, on the quarter they were reporting on. So let's see on guidance. I mean, I was really trying to finding it difficult. on anything that they're actually reporting on that I would hate. Q4 sales rose 16%. I mean, that's wild. Net sales, again, 3.2 billion versus the 3.04 that was expected. $6.68 was the earnings per share compared to the $5.68 that was expected. I mean, I don't know what. And as far as comp sales, the street was expecting 8% increase there. They came in and doubled that too. Why do we hate Ulta right now? This looks like a dip opportunity. It's from what I'm looking at so far. I know it's early, so just take that with a grain of salt. But this looks like a dip opportunity if I've ever seen one. Give it a couple days, see where it settles out. But and look, it's already starting to give back or claw its way back here a little bit. But I'm a bit confused at the sell-off here. Z-Writer says that means this is a buy. We will be looking at Docusign in just a second. I did see that move up, but all these kind of came out at the same time. So I'm just working through these a little bit at a time. So yeah, let's go ahead and take a look at Docusign. It did pop green and now it started to turn red a little bit. It's down around 1.25%. Let's see what Docusign gave us this quarter. So Docusign's expectations here were supposed to be coming in at 52 cents per share, $639.49 million in revenue, 19 upward revisions to 0 down. And that's, anytime I see that, I always pause. It always gives me pause. Whenever I see, analysts from the street that are just 100% bullish on this thing, it always makes me nervous. But they did beat. They came in at 65 cents versus that 52 that was expected. Revenue came in at 659.6 million versus the 639 that was expected. So all good there. Q1 revenue came in at 639. So the guidance, Q1 revenue guidance is expected to come in at 639 to 643 according to Oracle. The expectation there was 641. So in line with that, guidance wasn't terrible. They're also expecting earnings per share to come in at $2.70 to $2.71 versus $2.70. That's not really a big deal there either. The CFO is stepping down. Apparently he's supposed to leave later this year. 4% revenue beat, but I don't dislike anything here either. So far, I mean, it's not like knock your socks off earnings, but it's not bad. I don't know if it really would warrant the sell-off, but now it's down here around 3.5%. A lot of these are starting to look like dip grabs, guys. Ulta for sure looking like a dip grab, dip opportunity. I mean, it essentially doubled expectations from the street. Like, how much better do you want it? And guidance was great. I know it might sound like I'm shouting at the market, but sometimes you start looking at things, especially when it comes to earnings, and then the reaction just like makes you scratch your head. And it doesn't usually make me scratch my head all that often. But in this case with Ulta, it for sure does. Some of you might think I'm a bit biased here just because of how much I talk about Ulta and that I really do like the stock. But, I mean, you tell me. Tell me what was bad about Ulta and why we should sell it off. You know? Joe T says, yep, my baby mama loves Ulta. My wallet doesn't. I mean, they got Ulta and Target now, right? That should be cheaper. That's hilarious. All right, let's check in on a couple other ones that I haven't covered yet. So Bionanogenomics, Kathy Wood favorite, is now valued at $1.25. Remember when this was all the way up here at $15.69? Jeez, a whiz. Back in February 21. Hasn't even thought about going back to those numbers. Stock's up a little bit here after hours. Let's see if those earnings are out. Those expectations for Bionanogenomics, or BNGO, were supposed to be coming in at a loss of 10 cents, $8 million in revenue. There isn't one analyst that actually covers this. Hopefully I can actually find those numbers. But I remember BNGO, people went crazy over BNGO. Um, I don't. It doesn't look like. Yeah, 10K is out. Let's see here. 2023 financial guidance. Bionano expects full year 2023 revenue to be in the range of 35 to 38 million, which would represent a range of 26 to 37% growth over full year 2022 revenue. That's great growth. For a company that is this small, though, I would expect it to be a little bit better, but it's still solid growth. I'm not going to take that from them. I want to see what operating margins are like though here. But it seems as if Bionano actually had a pretty decent quarter. Q4 revenue was 8.2 million, which is a 30% increase year over year. That is a beat on expectations on revenue. They came in, let's see if I can find earnings per share. With these tiny companies, sometimes it's hard to find earnings per share. Here we go. According to Seeking Alpha, they came in a net loss of $38.67 million. They're not going to give me earnings per share. That's great. So it looks like they came in and beat. Looks like they came in and beat on earnings. It beat earnings. It beat revenue. Pretty solid growth year over year. Stock's up marginally, and actually it's flat right now. So we'll see. Let's go back to the 5 minute. We'll see what happens with BNGO. But those are your numbers there. Gap is now down 4.5%, and it's been kind of weird since the close. Let's see if those numbers are actually out now. Gap's expected earnings per share was a loss of 46 cents. $4.37 billion in revenue. 3 upward revisions to 3 down was the expectation there. And let's see what GPS came in as far as actuals concerned. And this is just another retail company that might just end up making me scratch my head. Net sales came in at $4.24 billion. That's down 6% year over year. The expectation, what did I say in revenue? 4.37. So they missed on revenue numbers. Net loss of 273 million, or diluted loss per share of 75 cents. The expectation was a loss of 46. So they missed earnings badly all the way around. Gross margin was 33.6%, deleveraging 10 basis points versus last year. None of this is good. None of this is good. And then all these numbers look like they make sense for a stock to be down this much already. It probably goes down even lower than this. Net sales were in line with the company's expectations for mid-single digits declines in the quarter. Company anticipates 2023 capital expenditures in the range of 500 to 550, reflecting lower technology project investments as well as fewer store openings. That's not good. Company anticipates 2023 net sales could decrease in the low to mid-single digit range. Yeah, see, this is another one. It's like, this is what I was talking about at the top of the show. Like, retail has really got me has my head spinning as far as like what the consumers are spending money on in retail. You know? Michael, so just checking in on some of the comments here. Michael says, I believe all of this is just profit taking. They're up big since the beginning of the year in regards to Ulta. They are. They're up around 10% since the beginning of the year. They're up around 45% over the last 52 weeks, but for good reason, right? I mean, they're crushing it. Mason asks, why are you confused? The Fed is raising rates. NQT, you're fighting the Fed. I'm not confused. I think you're misconstruing why I'm confused. I'm confused because of the massive mixture of results and earnings between the same sector, between the same type of industry, right? I'm talking retail sales here. I'm talking clothing. Big box stores are all mixed. Nobody knows which way is up right now. Nobody can give us a clear direction on where they expect them to be a year from now. You got companies out there that are like, oh, it's all systems go. Demand is amazing. And you have other companies that are like, no, demand sucks. Our earnings were terrible. Guidance is going to go in the shitter, right? Like there's this huge mixture between consumers. But then on the other hand, you have travel that's been crushing it, right? Crushing it. I mean, even Six Flags had great earnings during a non-peak quarter, right? Like, that's what I'm saying. Like, there's a lot of confusion out there when it comes to consumer and what they're spending money on right now. So, like, it's a big guessing game. Food. Wingstop annihilated earnings. People are buying wings like crazy. You know, like, but then Wendy's comes in and doesn't do well. Chipotle comes in and doesn't do well, right? Like, that's what I'm saying. It's like people love their wings. All of a sudden, they're just abandoning burritos. I don't know. Okay. Checking in on some of the other comments here. Z Rider says bye, bye, bye. Guess maybe referring to Ulta. Oleg says tomorrow rally on job data is everything lower than previous nightmare will spin positive reaction. Yeah, for sure. Jobs numbers are certainly going to play a factor in tomorrow's action, which, by the way, I'll be live to react to that at 9 a.m. Eastern time. Those numbers will be out at 8:30 a.m. Eastern time. So give you some time to digest a lot of that. And then we're going to react to it at 9 o'clock tomorrow morning. Checking back in with Ulta. It is trying to claw its way back here, but on pretty low volume. We'll see. It's down around 2% after hours. It was down as much as close to 5% at one point. Oracle is down 5%, but that deserves to be down here. Didn't really surprise or do much on earnings. Mixed results there. Docusign, same thing. BNGO came in and had a halfway decent quarter, but growth there, I think, could have been better. Gap came in and shit the bed. There's just nothing about Gap's earnings that I thought were good. Stock's down 5%. Probably goes down lower tomorrow. We will see about that. Checking on some of the other comments. M. Nice says, we are all saying, what if the numbers are better than expected when car prices are up and home prices are not going down as expected? We just got a 5% raise across the board, and my company sucks, says M. Nice. Well, that's what I was actually talking about at the top of the show. If you weren't here in the beginning, wage inflation hasn't actually caught up with actual inflation, and this has been an ongoing problem, ongoing issue. And so, like, those are some areas that I feel like the Fed just isn't looking at or really taking into consideration, rather than, hoping that people just lose their jobs. Let's try to get wages back up to where they actually belong. And it's very clear from a lot of these earnings that many of these companies aren't hurting for profit. Some of them are, but not a lot of them. Tiger's Edge says, I think everyone's too scared about unemployment rate tomorrow, hence the sell-off on some of these earnings numbers, whether they're good or not. It's a fair point. I mean, why would you want to buy something up today if you're worried about job numbers coming in terrible tomorrow, right? Yeah, absolutely agree, Z Writer. Snookeroo says, this is a great question. What companies would you buy on this dip in the market? So specifically, I don't know if I have any specific numbers for you or specific stocks. If I had off the top of my head, if I had to pick any of them, Alphabet, okay, is a tech stock out there that has one of the lowest. It is the lowest of the FANGs, of the major cap tech stocks, the lowest PE. It's the cheapest one out there right now. Got a lot of bad press from the ChatGPT debacle and its own AI mishap, right? It's down too far, in my opinion. It's very attractive at this level, especially after today. Meta Platforms is another one that's the second lowest one. I think that they're going to continue to crush it. And then SoFi would be one too. I think the small cap tech stocks have been beaten down a ton, and SoFi is one of those ones that I think, given the growth in the earnings that we've seen from them over the last several quarters, they're low key crushing it, and it's relatively inexpensive. The growth is amazing with SoFi, and they're outperforming things like Upstart and some of the other companies that are in their space. Yeah, they've gotten a bad rap with the student loan things, but everybody wants to focus. Investors want to focus on student loans, but then they refuse to look at all the other things that they have going on. The bank charters, the personal loans, and the increases there have been just amazing. The growth is ridiculous. And then I would go after maybe cybersecurity. We just saw CrowdStrike smash earnings. Palo Alto, Zscaler, Okta, all the cybersecurity space has been smashing it. So those dips, I think, are worth buying up. I know that the valuations are high on that, but just consider the growth. Just take a look, right? And so I think small caps tech is the area to look at when it comes to this dip, especially if we see the jobs numbers tomorrow come in lighter than expected, and CPI comes in better than expected, and PPI comes in better than expected, those low cap tech stocks, small cap tech stocks are going to do really well. And we've already started to see that this year. Just take a look at the IWM, the Russell 2000 index. We'll take a look at that right now. The IWM is, well, was in a breakout. I haven't looked at it today, but was in a pretty serious breakout from its downtrend, and it's still looking pretty good. I mean, today has been rough. Obviously, it's going to be testing that 50-week moving average, just like the Qs and the SPY is, but still very much in breakout mode here. At least for now. We'll see how tomorrow shakes out. Of course, that's going to dictate a lot of things going into next week, depending on how tomorrow closes. But we shall see, my friend. How's Ulta's earnings? GM Gundam says Ulta did great on their earnings. They crushed it. Absolutely annihilated expectations for the quarter they were reporting on. And guidance was great too. Stocks sold off. I don't know. Trying to figure out why it sold off a little bit. It's down 2.5%. Let's go back to the 5-minute chart. But I think this is more than likely going to be a dip worth buying, because those were some amazing earnings. Wingstop was because of demand for the Super Bowl? No, bro. That's not why they crushed earnings by a mile. And actually, the quarter they were reporting on did not have the Super Bowl included in that quarter. So try again. Lord Fenrir says, I would not buy anything for a long term right now. Play the charts and concentrate on day trades and swings. Lord Fenrir, I'm actually curious what your thoughts are on this. And I feel like we haven't talked about this enough. Would you buy T-bills right now? And I saw somebody looking at this earlier. I'm not going to scroll back up and try to find it. But I'd be curious about your thoughts on T-bills. And give me your guys' thoughts on this as well. I'm strongly considering making a video on T-bills. And if you guys aren't familiar, that's short for Treasury bills. Right now, they're paying 5%. And that's a guaranteed 5% for a 1-year Treasury bill. Right? Would you rather get 5% on your money in an environment where inflation's up, 5% year over year? So consider that. Or take your chances in the stock market, right? In the markets. You could, or go for an ETF, right? Would you rather buy the SPY right now or buy a 5% T-bill? That would be, I think, an interesting topic, interesting video that I may end up going into. And I don't even really know the answer to this, because I'm starting to see more and more people buy T-bills, right? Because of just where they're at. We haven't seen the return on T-bills like this since the Great Recession, since 2008, 2009. Does it make it worth it to you to make sure that to just know that you're going to guarantee yourself that 5% return? 5.4%, I believe, is what we saw in January. Z-Writer. Was it 5.4 or 6.4? I'll have to double check. Mr. DeSoto said, I've been buying T-bills weekly with excess cash. Lord Fenrir also brings up an interesting point, which I would counter with this. So he says that, well, Treasury just inverted, so there's that. It didn't just invert. It's been inverted for 6 months, bro. The 2 and the 10's been inverted for months. Yet the stock market continues to go up. And in fact, it's been up 20% since October. The yield's been inverted that entire time. So I'm not saying that, and let me be clear, I'm not saying that the inversion doesn't mean shit, right? I'm just trying to make the arguments of like, okay, well, if we were so worried about it, then why are the markets continuing to go up? Historically, we look at that inversion, it's like, if everybody's expecting this crash to come now because the yield's inverted, does that guarantee the crash coming? And I'm not trying to make an argument either way. I'm just asking the questions, right? Just trying to play devil's advocate essentially. Savvy Money Show says, where's the fun in a T-bill? Would rather buy a monthly dividend stock? That's an interesting point. That's an interesting point. There's a couple of dividends out there that are paying more than 5%. Tiger's Edge says, safer to get to 5% than put your money in a choppy year or decade that might go sideways. But what if it doesn't? You've heard me on Tiger's Edge and anybody else, you've heard me talking over the last several weeks that historically, when we get a year like we did in 2022, it actually ends up being quite a good year in the markets. You're guaranteeing yourself that 5% return. But what if the S&P returns 15 to 18% this year? And I'm not saying that there's a right or wrong answer. All I'm saying is that if there's a huge return in the markets this year, are you going to be okay with yourself on that 5% return regardless? Of course, you can make the argument that, well, what if it tanks and we see another 15% drop in the market this year, right? That's also a possibility. I'm not ruling that out. Anything's possible. So you just have to ask yourself that question. What's your risk tolerance? How are you feeling about your own investments, your own money? Are you willing to risk some of that, or do both? Right? There's nobody says that you can't just put money in the market and then buy T-bills, and there's a lot of people doing that, for sure. Lord Fenner says the bubble's going to grow until it pops. I'm still looking at pop between third and fourth quarters. Bills are a safe play. Yes, they are. I'm curious about this bubble though too. I mean, we saw the S&P down quite a bit last year. I mean, the Russell 2000 had what was the number? 75% of small cap tech was down 80% or more last year. I mean, that's a pretty. I don't know if I would consider that a growing bubble. So where's the bubble actually at? That would be my next question. Credit limit, the credit card limits to certain balances being at record highs is absolutely a concern. So that's a bubble that I could get down with. That certainly could be a huge factor in that third, fourth quarter that you're talking about, especially if layoffs continue. I'm definitely down with that. I could see that happening. Housing bubble? Nah, I don't see that happening at all. I think demand's going to slow down, but as far as a bubble, I don't think housing's in a bubble at all. We'll see. All good questions that I think we asked. I think these are all good video ideas, honestly. I'm just kind of spitballing. But I love the T-bill video idea. If you guys are interested in that, I may end up doing that. I'm going to put out a couple polls maybe this weekend. David Moore bought aggressively today. Which stocks did you buy? Rohit says, what's your thoughts on Silicon Valley Bank's SIVB? I got to be honest with you. I'm not familiar with that one. You have to research on it, but it seems like it has to do with MBS. I'm really not sure. Too many people are sitting down. That might mean we'll only go up. I don't know. Maybe. Monday, we may see the real massive drop. Why, Z-Writer? Give me a good reason as to why. The 1D Lee says, I'm a bit more adventurous and believe you can do better in the market instead of having your money locked up in Treasury bills for a while. Yeah, I mean, they're 1-year Treasury bills, and they do have pretty decent returns right now. So if you are risk averse, Z-Writer, okay, Z-Writer, I see you. So, like if you're just worried about this year in general, of course you can just be like, well, I'm out. I'm just not going to play ball. And you guys hear me say this all the time on individual stocks, right? Like sometimes I'll say, you know what? I'm not going to go long on this stock, and I'm definitely not going short, right? And maybe this is just one of those years where you're feeling, hey, maybe the markets go up, but I'm also really worried about them going down. And I'd rather not be long or short in the market this year, period, because I'm just too uncertain about it. And I would not blame you one bit, just given what we've seen from earnings, right? And a lot of these CEOs talking about the environment, and they're all saying something different. So you could absolutely make that argument. And like I said earlier, I don't think there's a wrong decision here. You just have to do what you feel is comfortable with your own risk tolerance. Lord Fenrir chimes in, says the bubble's probably a bad choice of terms. How about the bull run? So, so just like the current bull run, we're going to crash end of year recession in full force in 2024 with a turn to bullish during 2024. Okay. Be curious to see what actually causes that. Could be interest rates finally catching up with themselves with everything else. Potentially. Could see that happening, maybe. We'll see. We shall see. For now, as I mentioned, I remain bullish on the year until something changes, and it could be as early as tomorrow. Tomorrow we'll have not earnings. We'll have jobs numbers that'll be coming out that Don and I will be reacting to. Oh, I'm way out of focus. That Don and I will be reacting to, and there we go. And you're not going to miss that. So make sure you hit that join button, hit the subscribe button, and we'd love to have you guys tune in tomorrow at 9 a.m. Eastern time. So if you want to react to those numbers, you're not going to miss it. It's going to be a good time tomorrow. Don's going to give his perspective as well as I will give mine. And who knows? Maybe some tunes will change tomorrow. We'll see. But guys, thanks so much for tuning in. I love every single one of you. And listen, I'm not going to let you go without birthdays. This morning, I wasn't here because I was traveling, as I'd mentioned. And I know you guys always miss birthdays. So, happy birthday to Kabi Lame. He was 22 years old. If you guys don't know who he is, he's a TikTok star. The largest TikTok account on TikTok, I believe. Bow Wow is 35. Oscar Isaac from A Knight's Tale, one of my all-time favorite movies, is 43. Chingy is 42. And B. Smith is 37. Today's my birthday, guys. And let's not forget about Nikki Blonde, who's 42, who's best known for Analicious, Backdoor Whores, Welcome to Footville, Piping and Railing, and plenty of meat in her diet. Guys, those are your birthdays today. Thanks so much for tuning in. You'll get birthdays tomorrow. And again, please make sure you join us at 9 a.m. Eastern time. And we're going to be reacting to those jobs numbers. Thank you so much for tuning in. We'll see you all tomorrow. You guys are the best. Have a good night.